So will the election outcome change the real estate trajectory? In 2024, we are like 3 weeks away from the presidential election, and I keep seeing certain candidates' ads on my websites and the browsers, but there are many different factors that could change the market. A lot of the home sellers and buyers are like kind of wait to see what happens mode. So buyers aren't as aggressive or active. Of course, the interest rate went up a bit too after Fed lowered the rate. So it doesn't quite make sense right now. Everything feels like up in the air. But let's focus on election outcome and where the market could go based on these some of the key indicators. Welcome back to Shawn Realty Podcast. This is Shawn, the Realtor guy. So the first one that I want to focus on is the policy change. We don't know what they're going to do. They never follow through the promises that they make when they campaign. But, like different administrations have introduced different policies. For example, I remember in 2000, I think 8, 9, 10, there were $7,500 credit that you had to pay back, and then they changed to you don't have to pay back. And I think it went up to about $8,000. That did actually help some first-time buyers for closing costs and things like that. But it depends on what they're going to do with the tax incentives for homeowners, subsidies for the first-time buyers, or changes in mortgage interest deductions, and as well as obviously what they are going to do to change the housing supply, which is, in my opinion, one of the biggest change maker. So potentially stabilizing or reducing home prices, but I don't think it will reduce. It will make it more affordable. So it may sound kind of confusing there, but price going down doesn't always mean it becomes affordable. Price could go down, but if interest rate goes up, it's not affordable. And right now, price is staying up high and interest is going up. So affordability is not so good. So depending on that, and then the consumer confidence is the other thing. Right now, there's so much like doom and gloom kind of news out there. A lot of preppers videos are showing up on my YouTube feeds, and I guess I'm watching those things. But election, results can affect the consumer's confidence. Economic stability or growth could boost the confidence or subtract the confidence. And consumer wanting to spend money feel like the price is going to at least sustain or go up. That's when they get motivated, because typically like the first time home buyers, they keep paying the rent. But like I said here, the wait and see approach is possibly leading to a temporary slowdown. We are here right now. We're in the smack in the middle of wait and see kind of mode. And I say about 30, 40, 50% of the buyers are not able to because of the high interest rate. Or if they already own a home, their mortgage rate is lower than 5%. So it doesn't make any sense to move unless you want to pay $2,000 more a month. So that's kind of like my situation too. My rate is pretty low. So it doesn't make any sense to even shop around for my own, let's say, going to different neighborhood or downsizing or upsizing. And then the interest rates, a lot of people are just focusing on that. But as I mentioned earlier, the Fed's actually lowered the Fed funds rate, but mortgage rate has been going up for the last several days. But ultimately, how much can it come down? The mortgage rate has to come down, I say about close to 5% to make some kind of movement from wait and see kind of home sellers and home buyers. Excuse me. And right now it's a cool market. I look at all the indicators of different metro data, and The days on the market is increasing to anywhere between 50 to about 90 days. The pricing is almost like stagnant. But the pending price per square foot, that has been going down in most cases. And then the regulation and deregulation. I'm not a big fan of regulation, but deregulation could go the other way too. That's what we experienced in 2006 and 2007 market crash, because they deregulated so much. The banks were just giving loans to anybody, even a dog like walking by in front of your house, they could give the loan. That's what happened. So deregulation isn't always a good thing, but regulation isn't that good either. I believe in sort of like free market situation, but what they can do is just do something, regulation or deregulation, to give us more supply, more homes, basically. Because last about 5 to 8, 9 years, we've been like backlogged. There are more buyers who want to buy, but they couldn't buy. And the other sort of like fuel that added to the fire was big institutional buyers were just gobbling up properties left and right. And that's the next one. The investors' behavior is one big one that determines how market is going to react. I believe there are some situations when my buyers made offers. I want to say close to 10 to 20% buyers offers that the sellers received were from institutional buyers. This is a completely guess game here for me, but I believe that was the case. So regular home buyers with smaller down payment, 10% down payment, just couldn't win, against like 50% or full cash offer, that type of things. And the other thing that to note here is that investors set the bottom, sort of like a layer pricing. Typically, those are first-time home buyers buying price range, and they have to net certain based on the rent. So typically, the investors buying zone is like almost same as the first-time home buyer products, and they're competing against. And they set the tone for the bottom of the market. So investors' behavior is important. And I made a sort of like example here. If you let the institutional buyers like gobble up all the properties, what's going to happen is, in my opinion, kind of like the Vancouver, BC, Canada situation. People who live there really can't afford to buy a small apartment even, because they are bought up by the international investors or institutional investors. They're not even available, or the price is way too up there. And the foreign investment, lastly, I think, it's kind of like we do want to have the investor-friendly environment, but they shouldn't be buying up what American people can buy and live in. That's the problem. They keep talking about this country becoming like a renter's nation because most of the homes are going to be owned by the investors. So, when I see them more and more, and when I see that the individual homeownership is getting more challenged, I just can't talk too much about investment anymore. Individually, I think it's good to try to invest. But the first thing that we have to do is get more people into a home ownership. Individual home ownership is way more important for all overall economy, or for the housing market, or for the individual well-beings. So I'm sort of like against foreign investors at this point, at least in the United States. In South Korea, where I'm from, that's been the case for more than a decade. You can't really invest that well because they have limited land, limited supply, and the government is really, really heavily regulating. I don't want that kind of heavy regulation, but there has to be some kind of heavier tax on foreign investors. I like that idea, so that regular Americans can buy more homes and own more homes and live in them, because that really matters, in my opinion. So I'm not going to talk about the politics here, who I'm going to support, because that's not why I'm here. But depending on what they're going to do after they're getting elected, I doubt that either side will really follow through everything that they're promising right now. But these are the things that you need to focus on, kind of look out for. The supply and demand is one of the big ones. The somewhat limiting or putting heavier tax on big institutional investors or foreign investors, I think that's important. The rate control is also important for better home affordability. And the other thing that I didn't talk about in this video is the rent price. If the rent price goes down, which means that there's less demand on the rental price, that goes into lowering the purchase price. So keep an eye on rental prices, and I'll do another video this week with the A-City, the Shawn Realty Housing Market Index. Hopefully you can subscribe so you can watch that as well. Thanks so much for watching, and if you hit the like button, it's going to help my video reach more home buyers like yourself or home sellers like yourself. So I really appreciate the support, and have a great day. I'll see you on the next video.